Hey, this is Kyle at Projection Hub, and today I'm going to show you how to write a business plan for a gym. And what this video is not going to be is I'm not going to write every single word in a fake business plan right here in front of you. What I am going to do is go through a outline that's typical for a gym business plan and describe the different sections of that business plan. And then I'm going to highlight 5 key points that if you hope to get approved for like a small business loan or even potentially, bring on an investor, that you really want to focus on in order to increase the likelihoods of getting approved for that or having success in that. So who is Projection Hub? We have helped more than 50,000 small businesses create financial projections for their business plans, for their business loan applications, for their pitch decks to try and raise investment. Customers we serve are Main Street businesses or small businesses. And we've helped a lot of gyms, whether those are membership models or class-based models. We've helped a few hundred of them create financial projections. Now, me personally, before my time with Projection Hub, I actually worked for a small business lender as a loan officer. And so I worked directly with small business owners to review their business plans and their financial projections and put together a lending package to try and get them approved for financing. And during my time, I got to work with a few gyms and get them approved for financing. So I do know what a winning gym business plan looks like. Now, full transparency, I don't own a gym. I don't plan to own a gym. So this perspective is coming more from like a lender or a possible funder that's reviewing your business plan and the things I would want to see in that business plan. So that's where that perspective is going to be coming from. Now, if you like the video at any point, please give it a thumbs up. That really helps us as a fellow small business that's working with other small businesses. And feel free to subscribe to the channel too. Not all of our content is about gym ownership, but talking about owning a business, growing a business, financial management of that business is something we do often. So we would love to have you join the channel. I'm going to be using a free gym business plan template. It's available down in the link below, no strings attached. You can grab that so you have your own copy because it's only going to be as good as the numbers and the content that you put in it yourself. So feel free to grab that after this video. And hopefully the key points I'm going to highlight for you today will help you make your business plan shine. So without further ado, let's go ahead and get in. Okay, so before we start scrolling through this, why is your business plan important? It might be kind of obvious, might be kind of cliche, but as a well-known industry, you don't need to educate the lender on what a gym does or what that industry is. The purpose of this is to demonstrate your specific plan to be successful. The more tangible that we can outline that roadmap to a greater degree of confidence that you're going to be successful, so too does the odds of your approval for a loan request. Those go up. So we really want to be specific. Now, you'll notice here kind of the table of contents is going to outline what we're going to cover. You'll notice this goes up to 7 pages. Contrary to popular belief, your business plan does not need to be 40, 50 pages, okay? Now, if you want to create a really long plan with all of your ideas and to vet different things as an exercise for you to feel prepared, please do that. That's a great exercise for you. But what you turn over to a lender or what's going to be reviewed, you need to refine that back to more like 10, 15 pages, okay? Because it's actually going to hurt you in the long run because all of the technical details about your business, these key points that your lender wants to know about the gym, they're going to muddy that up. Okay. It's going to be harder to fish those out in front of those things. So we want the business plan to be reserved for the key points that are going to make the difference that your lender needs to know. So, it's going to need to be longer probably than 5 or 7 pages. I would say a little bit longer than that, but don't go over that 15-page mark because then it's just starting to get unnecessarily long. So you can see the roadmap we're going to cover here: executive summary and company description, market analysis, the different services that your gym is going to offer, marketing and sales strategy, operations and management, and financial projections. Okay. So what I'm going to do is I'm going to scroll through, talk about each section a little bit. And then when we come across one of those key points, I'll highlight that and we'll dig into it a little bit more. Okay, let's go through this. All right, your executive summary. I want you to think of your executive summary kind of like the cover page to a resume if you're applying for a job. You can see in some of these sub points here, we're going to highlight some key details, but we want to stay high level. Okay, you got your name, quickly describe maybe what you're going to offer, and a brief list of services. If you have a mission, maybe the type of, we got target customer that we're going to be identifying, and then a quick summary of your financial projections, including like what your total startup costs are going to be, maybe when you plan to break even, maybe how you plan to get your startup costs, whether that's a loan or you have an investor involved. So it doesn't need to be longer than a page. Keep it pretty brief there. And moving along to your company description. Now this is going to be a little bit more of a description of the people involved. So you'll see like ownership and management structure, but this is going to bring us to key point number 1. So key point number 1 is relevant industry experience. You'll see here, we've got some background history in your ownership here. We want to make sure we highlight if you have experience working in a gym, personal training, even owning a gym, you want to include that here. Okay, because that's an indication to someone that might be giving you money that you know what you're doing, or you have some experience doing what you are doing now. If you don't have relevant experience, do you have a partner involved that has relevant experience? If you don't have a partner that has relevant experience, you have a key employee on board or multiple key employees on board that have experience running a gym or growing a gym before. My time as a lender, it wasn't uncommon to have someone looking to start a business that had nothing to do with maybe a different career they'd had for a really long time. Now, that's not saying there's anything wrong with that, but you can see why that would cause some concern or some questions for your lenders. They want to actually know that you know what you're doing. And if you don't have that experience, what have you done to educate yourself or prepare yourself for that enough to give them that confidence? Okay, so that's one thing we really want to make sure gets highlighted. It's relevant experience to do what you're trying to do. So that's key point number one. Okay, now moving forward here, market analysis, which is going to bring us to key point number two. So the point of this section is we want to highlight that there is room in the market for the business we're going to be opening. And if there isn't room, or maybe it's pretty tightly competitive or even oversaturated, what do we have that is going to be our secret sauce to disrupt the market and take that customer base? Now, just because it's oversaturated doesn't mean you can't get approved, but you just got to be prepared to defend and identify that, yeah, there is room for us here. Because a gym is geographic tied, right? You're going to have a physical space. You need to understand who is in that radius around you. You better understand and know every single gym that's within a 10-mile radius, okay? So you don't need to list all of them in your business plan. That could be a thing you do on a different document. Outline all of the gyms in that 10-mile radius. Outline what their focuses are. Is that classes? Is that personal training? Is that CrossFit? Whatever that is, you need to outline their services so you can start to see trends between opportunities or who your direct competitors are going to be based on what you're going to do. You also want to include pricing, membership costs, because you want to know where you fall in that spectrum, and you want to be able to say, okay, in the market, there are 15 other gyms in a 10-mile radius, but nobody's doing CrossFit, and that's what we're going to do, okay? We want to try to provide as many tangible examples here. What lenders don't want to see is that you are under the impression that you're just going to start a business and people are going to show up. Okay. They want to see that you're doing the work to point out the actual opportunity. And so what are some ways we can do that? Now, you could go out and you could pay thousands of dollars and have a market research study done. And if you have the funds to do that, you can do that. It might increase the likelihood of you feeling confident, that this is going to work. But there are also some free ways you can go about doing this. For example, go to Google. Okay. I live in Indianapolis in Indiana. And I'm using it as an example. On the northeast side of Indianapolis, there's a suburb called Fishers. It's growing rapidly and it's pretty affluent. Okay, so there's a few 100,000 people that live in this area. So I looked at gym near me and have my location set to Fishers, Indiana. So now I can kind of see all these gyms. Now, Google can be a little finicky, right? If you zoom in, some more might pop up and it changes a little bit, okay? But this can just be a helpful starting point where you can start to maybe see some gaps, right? Like, okay, there's nothing over here, there's nothing over here. So you can see some potential holes in that, but you can also see all the businesses that are, all the gyms that are involved, okay? So maybe you start there to start working through your list and start creating that list of what they offer, what their price points are, what their locations are, to see if there's gaps. Another thing we can do here is another Google tool that's free is create a Google AdWords account. It's totally free to do. Once you do, you can go into Tools, Keyword Planner. And what this will do is you can simulate and see how often are certain search phrases being searched on Google or on Google Maps. Okay, so I have the location set to Fishers, as I mentioned, and I want to know how often are people searching gym near me. And this is going to show us a few helpful things. First, it's just going to show us how often are people searching for that, okay? That may not be super helpful because I know there are more than 880 people in a community of 300,000 people that are going to gyms, okay? But what I'm more interested in is the trend. So I can see in the last 3 months, it's been around 0%, right? Every month has been about the same. But year over year, that's gone up by 40%. So to me, that's an indication that it's growing, which supports the claim that there's opportunity, right? If that's growing, that means more people are looking for a gym. That means there might be opportunity for us to start a gym. Third helpful thing I would say this helps us do is you can see related search terms. Okay, so now we can kind of see some of the specifics that people are searching for. So year over year, 100% more people are looking specifically for an LA Fitness. Okay, but in the last 3 months, it's down a little bit. Let's see, CrossFit up 33% in the last 3 months, but down 20% year over year. Boxing gyms up 50%. Okay, that's an opportunity. 24-hour gyms up 67%. So you can start to see that can give you a sense of the trends. So once you know the makeup of all the gyms in the area, how are they, where do they list on that trajectory? And then you can see the competition, which is related to advertising, right? Like if you wanted to start a gym and you advertised for this keyword, that's how competitive it would be. Okay, so, and another thing you might include in that is if you identify a location that's got other attractions that would be related to the type of customer that you want, identify that. You say, we identified a space that's got a fresh grocery, a juice bar, a healthy food restaurant, and there's no gym within 4 miles of it. And we think that would be a great opportunity. Include that. That's a good thing to identify and market. Okay, so that's a quick example of how you can do a market analysis for free and on your own. Now let's move ahead. Service and product line. Okay, this is not one of our key points, but it is very important for you. This section is likely not going to win you, or get your approval, but it can certainly break your business plan. It can certainly hurt it if you don't put enough attention to this. Similar to me, your lender is not going to be an expert on gyms. Okay, so they're not going to look at the breakdown of your services and say, oh, wow, man, it's a shame they're missing that service, or, that's a little bit much for that service. They're not going to be thinking that. But if you skimp on this section, they might say like, well, they didn't hardly outline what they're doing, right? And that's going to cause some concern. So you want to meet expectations here, put a lot of information in here, but don't feel like you got to overdo it, okay, on that section. All right, moving along, marketing and sales strategy. And this is going to bring us to key point number 3, which is customer acquisition. So in the market analysis section, we just identified, okay, there is a customer base available. There's room in the market for us to open up a gym. Now we need to demonstrate how are we actually going to get those customers. This section should include some basic expectations, right? You're going to have a website, do some advertising, have a referral program or whatnot. That's kind of basic. I feel like that's kind of expected. That's the minimum expectation. What's going to really make your business plan shine is if you can include what's called traction. That is a demonstration of momentum. Okay, it's going to be going above and beyond to give your lender confidence that when those doors open, the business is going to be starting right away. Okay, that there's going to be activity. So what are some examples of the way you can do that? Okay, so let's think through this. Maybe one is you start doing personal training out of your home gym, or maybe even at another gym. Okay, and you get a list of 10 or 15 clients that use you regularly, and you're talking with them and saying like, hey, I might open up my own gym, and they're like, yeah, I'll definitely come follow you to your own gym. Okay, put that in your business plan. You got 15 customers ready to start and follow you right to the gym right away. Do you know 2 or 3 other friends or people in the gym that are trainers that can do the same thing? And they say, yeah, when it opens, we're all going to come. Okay, that's great. Your gym can open up its doors and you've got 50 members that are going to come in and start doing training. That's awesome. That helps word spread as well. Okay, so that's an example of traction. You could gather some pre-signups for like a founders club who get a first year discount to your gym, right? By just signing up for a list to express maybe their interest. You can do the same thing and do giveaways when the gym opens. You can start a social media channel where you're giving advice on how to do certain training components and start building a following there. You can schedule and host free group training exercise classes at a local park or, community center, right? So those are all examples of traffic or traction, because those do a few things. One, the best thing you can do traction-wise is demonstrate sales before you even open your front doors. If you're making money before even your doors open, that's amazing. Second best thing is having names on a list. Even if you're not selling things, if you can have people showing up to events, watching and getting free content from you, wanting a promo code for the first year, those are all demonstrations that people know what they're doing, and it shows to your lender that you're hustling, you're committed, you're trying. You're not just going to build the gym, open the gym, and people are going to show up. Okay. So you want to have the minimum expectations there, but to really level up your business plan, demonstrate traction with numbers. Okay. So that's key point number 3. Now let's move on to key point 4. Now, this is a little bit of an elaboration, I would say, of the first key point I made, which is relevant experience. This is another place where you can put in your management and leadership structure why your team's qualified, uniquely qualified to manage and run a gym well, but you're going to include some other basic things in here like day-to-day operations and staffing requirements. All right, financial projections. This is kind of the big boy when it comes to your business plans. Now, obviously, we're a little bit biased because what we do is financial projections for businesses in general. But even when I was a lender, still the most important part of a business plan or a loan package was the financial projections. And they're going to take up the majority of your business plan. So let's see what's included in here. We've got some quick narrative, and then we've got some charts and data. Okay, we've got 5 years summary of some key financial components like projected revenue, projected profitability, some specific data like how many members are going to be gained each year, churn rate, how many people are going to leave as members, the lifetime value of those members, sales growth over 5 years, key ratios over the first 5 years, and then the most important thing are the financial pro forma statements. We've got a 5-year income statement, we've got 5-year balance sheet projected, and we've got 5-year cash flow statement projected. Now, quick plug, we do have a Gym financial projection specific template that generated all those things I just showed you. Okay, this template is less than $100. And actually, if you stick around to the end of the video, I'll give you a discount code to get a good chunk off of that too. If you have a CPA make this for you, it's going to probably be a few $1,000s. And if you're creating a business plan or trying to get started loan, you will have to have financial projections. So you want to make sure you do them right. Templates are designed to be able to be done by yourself. If you do get a template, we're here to answer questions and help you through this. You'll put in things like your startup costs, any investment, loans. As you fill the projections, it's going to help you calculate how much cash do you actually need to have from a working capital standpoint. What's special about this template is it's not just going to say, what's your estimated revenue? What's your projected revenue? It's going to actually calculate it for you using Gym specific terminology. It'll help you calculate how you're going to acquire your members, how many of them will convert to members, what are your membership plans, what kind of classes you're offering. I should mention, we have a membership plan that includes some classes as well. We also have a template that's specific to classes. You get both with your purchase. If you're going to sell food and juice and drinks, if you're going to sell merchandise, you can include that in here. You'll include your operating expenses like rent, if you're going to pay for commercial cleaning. And then if you have salaried employees, put those in here as well, as including ownership pay. And then it's going to generate all that information I included in the business plan for you, including annual and monthly breakdowns of all of your projections, which your lenders are going to love you for. Okay, so your financial projections are not key point number 4, I think, that we're on. Financial projections are an expectation. You need to have them, so make sure you do them well. Key point number 4 is, are your financial projections realistic and within industry norms? Okay, so you might ask, well, how do I know? If you haven't ran a gym before, been inside a gym's financial statements, you might not know that information. Go to Google. Google is your friend. Okay, so what I'm going to do, take these projections one more time. I'm going to look at some of this key data, right? So let's talk about profit margin. What's typical? I'm going to go to Google and say, what is a typical profit margin for a gym? Okay, it might spit out an answer at the top. You might have to look through some of the top results. But let's see, median is 16.5%, 20% for fitness only, and 15.5% for multi-purpose. Okay, that gives us a good basis. Let's go over and check our projections out. First year, obviously it's common to maybe lose money. Okay, you might not break even in your first year. That's okay. You're gonna have to have cash to cover those losses, but that's okay. But then once we do break even, we're well within industry norms when it comes to profit margin. Okay, so you can do that same exercise for any data in your template. What is typical revenue? What are typical startup costs? What are typical operating expenses as a percentage of revenue? So you can really find out, am I in line with those standards? That's going to make you feel comfortable and confident when you are talking to a lender. You're like, no, this is within industry norms, and you can feel confident in that. So that's going to bring us down to the conclusion, which is the whole business plan structure. But you probably noticed I've only covered 4 key points, and there's still a 5th one. Now this applies more specifically if you're trying to get a business loan, and that is going to be what's called skin in the game. Okay. So what I mean by that is, just like when you buy a house, the bank is going to require you to have a down payment, maybe 5%, 10%, 20%. And they're also going to require collateral, which is the house. They're going to put a lien on that house. Same concept is true if you're getting a business loan. Okay. If your total startup costs are $100,000, for example, they might say, okay, we'll lend you 80, but you have to put in $20,000. So you're going to have some cash, whether that's you borrowed that from someone else, or maybe someone's gifting it. Maybe you have a partner that's investing it. Maybe you have that cash in savings. So that's part 1. Think about that as your down payment. And then part 2, you're going to have collateral. Now, gyms are equipment heavy businesses. So if you have a lot of exercise equipment, you can count some of the value of that towards collateral, but that's probably not going to be quite enough. If you're buying a building, that's your collateral. That's great. If you're renting the building, you're probably going to have to put in some personal collateral. Do you have can you put a second mortgage on your house? Do you have a free and clear vehicle? I'm just giving you a heads up. That's going to be expected. Many people that I talked to when I was a lender would come to me and they say, I want to keep my business and personal separate. That's great advice when it comes to bank accounts and bookkeeping. Keep that separate. But when it comes to getting a loan, that's just not realistic. I'm just telling you that right now. The lender is not doing that so that they can control your life or wreck your life. They're just trying to protect their investment, but they also want to see that you're committed, both personally and business, that if the business fails, you're not just going to run away. Okay. So they want to see that commitment from you. And I just want to make that clear that that's going to be an expectation. So be prepared to have that outlined in your business plan. If you have that in your business plan, that's really going to impress your lender, because lenders usually have to ask and beg for collateral to make that decision. So if you're already saying like, I'm already prepared, we're going to use this as collateral, that's really going to wow them. And that's it. That's 5 key points. If you're putting together a gym financial projection template, again, you can get this free business plan template down in the description. I've also linked the financial projection template down there. We have a whole video guide of how to fill that projection template out. I think I promised you a discount code. You can use PH20BP for a 20% discount on that financial projection template. If you have any questions, reach out to us at support@projectionhub.com. Happy to answer your questions. If you have projections already and you'd like us to review them for free, send them our way. We'll give you some feedback on those. And again, if the video was helpful, please give us a thumbs up and subscribe to our channel for some more content. And I wish you the best of luck. Thanks.